Okay, here we go. Another session in TradingView. I'm going to depart from the mechanics a moment and offer some Zen or some philosophy behind trading. There are investors, and investors will look at a much larger time frame than the other types of traders. So, what you're seeing in front of you right now is the monthly chart on the Micro E-mini Russell 2000 index. The bars all represent a month of price action. So an investor would come in and look at this overview. So we're looking all the way back into July of 2020. And here we are today over here. Let me change my cursor, okay? So I'll do a demonstration. Here we are today, February of 26. So an investor would look at the chart and see that we are indeed in an uptrend because price action has moved up over the last 6 years. So an investor may want to take a look at the chart like this and determine that maybe the market has peaked because we're right there at the historical high. In fact, we just crossed the historical high just a few weeks ago, and I'll show you on the chart what I'm talking about. So if I get a regular horizontal line, I can draw that line over the last historical high, which was in November of 21. And you can see the little wick right here. If I zoom in a little bit, the little wick in January exceeded the high, which means we went above the historical high. And we'll probably go, I don't know, it'll probably go up in that there's no real indication that the price will fall dramatically. So anyway, an investor will probably take a look at this chart and determine whether or not they want to buy or sell. I'm not an investor, so I couldn't even speculate. So now that's the monthly chart. Investors will use the monthly chart. Then you have what we call swing traders. And swing traders will use the 4-hour chart or even the daily chart. What am I on? I'm on the 4-hour chart right now. I'll go to the daily. The daily chart, and each one of those bars that you're looking at represents a day in price action. So a swing trader will look at price action and determine, based upon historical evidence, whether or not they want to buy or sell. And looks like I still have that line up there. I'll erase the line. That was from the monthly chart. So anyway, a swing trader, will use the daily and the 4-hour chart to make their technical determinations. As we look at the 4-hour chart, we are seeing that the Micro E-mini Russell is actually trading inside of a range. I'm just simply drawing a box that will let you see what the representation of what a range might look like. You can see very clearly that at one point in January 26th, price started to decline. It went what we call bearish. A declining market is bearish. An ascending market is called bullish. And then since about the last week of January, the E-mini Russell has been trading inside of a range. Now, this is a pretty significant range because I have made and lost money inside of this range all month long. Okay, so don't let the price action not being in a uptrend or a downtrend fool you. There is a lot of money to be made or lost inside this range. As you can see that it came down, it went up, it came down, it went up, it went sideways for a little bit. Now this is not good price action. These are actual hours that you should not be trading. That's what a swing trader will look at. They will hold positions over a period of days sometimes. So a swing trader would see this historical low right here, and they would see that wick right here, and they would say, "Oh, yeah, I need to get in here." And at some point on this candle, they would drop down to a lower time frame, and they would get an entry and see how far they could ride this particular trend up inside this range. So that is what a swing trader would do. And you'll see these little vertical lines. I say little. These vertical lines that have these dashed vertical lines, these are what we call session breaks. They represent a day of trading. So from the 12 o'clock until 4 o'clock New York time. So 12 midnight to 4 in the afternoon is what we call a day. And if I go back over to the day, you see that the sessions have disappeared because what we're looking at is a session. Each one of those bars is a day of trading. So the next level of trader is what we will call a day trader. I would be considered a day trader because I will use the 1 hour chart to make my analysis, and then I will also use the 15-minute chart to help me make my analysis to determine when and where I want to get in and out of the market. Okay, so right now I am on the 15-minute chart, and each one of those bars that you see there, is a 15-minute period of price action. The next category trader would be what we call a scalper. Now, I'm somewhat between a day trader and a scalper because lately what I've been doing, I've been using a strategy that uses the 5-minute chart to make my analysis. And we'll just look at this last New York session. This was today's New York session right here, this little white area. And you'll see that this white area is distinct from the blue area. And the reason for that is that the blue area is what we call digital trading hours or after hours or pre-market hours. You have to have a lot of margin to trade in the blue area. So I have to get in based on the amount of margin that I actually have in my account. I have to get in during the New York session, and I've got to be out before the Asian session starts. In fact, I've got to be out an hour before the Asian session starts. That's just how my broker wants me to do business. So I like to use two charts for my price analysis, and most scalpers will use two charts, or if they've got the free version of TradingView, they will simply go back and forth between the chart they're using to do their buy or sell entries and the chart that they're using for their analysis. So Anyway, those are the categories, and I'll put them up here again for you. Investors, we have swing traders, we have day traders, and we have scalpers. All right. Investors are long-term traders. Swing traders are what we call short-term. They'll hold positions over several hours, over several days. Day traders will get in during one session and may hold their positions over a couple of sessions, but typically they're in and out during one session. And scalpers, which I'm probably closer to than anything, we want to get in and we want to make a certain amount of money, and then we want to get out. That's how we scalper will want to trade. Okay, so I think that's enough for this session, and we will see you on the next side.